I believe that's squarely where they are positioned. Pramod Gubbi, founder, Johnson right now. Pramod, you must be smiling your way to the bank and to all your clients, because somehow that theme just continues. The market is just extremely low on confidence when it comes to any of the sketchy names.
Indeed, I think we are in that phase of the market cycle where typically you see some sort of a bit of cleansing out of sorts.
I think that's the word.
It's a timely reminder for the markets that governance should be right up there in terms of the criteria that you use to choose stocks, because in the long run it has a material impact on the sort of returns that you can get, and no amount of compromise can be justified based on valuation and pricing. So given our philosophy, that's pretty much the first line of defense for us. We have a proprietary forensic accounting model which works as a proxy for governance and the promoter's integrity. And as a result, we need to try and eliminate as much risk emanating from that aspect of investing right at the outset. It doesn't matter how great the business looks from the outside. If we're not comfortable, we're happy to stay away.
Okay, let me try and pose at least one question. What's got the fancy of select people right off late are some of the PSU names. Now, I don't know whether it's got to do with the subscription that IRCTC received or otherwise, but that's the area, the PSUs, where you can argue on both sides that one, the governance is good because it's sovereign in that sense, but two, the governance will never be good because you never know when the government comes in and chips in. Do you look at this pocket at all? Have you looked at the valuations or the business models of any of the PSU names which have attractive models, but because owned by the government, a lot of people just shun them away?
Yeah, it would probably be in the latter basket. Okay. because of the the ownership. We tend to stay away because often I think any government, irrespective of political party, tends to sort of confuse these companies as sort of publicly held companies versus sort of departments of governments used to do or rather offer public services. So as a result, the profit motive is certainly not consistent. So it's very difficult to make a long-term call on many of these companies, and we prefer to stay away rather than trying to sort of pick out one of these who could be different.
What do you make out of Telecom, and now that the step that Jio has taken with regards to the IUC and transferring that to customers as an indirect tariff hike? Do you feel that this would, in a way, prompt others to start doing the same, and therefore is a stepping stone or towards slightly higher ARPUs and getting customers to come in at high rates?
No, quite possible, actually. I think we have seen the beginnings of consolidation here. I guess there isn't too many left anyways. Even the few left are in pretty bad shape as far as balance sheet is concerned. We've also heard about the two government entities being either privatized or looking at other solutions, which means that consolidation will only improve in the sector. So that should normally augur well for tariffs and ARPUs. But does that make telecom a sector to look at more from an attractive investment perspective? I don't think so. At least from our perspective, we would rather wait and see how things pan out. Because
the doubt is what, on rates, or is it because of the indebtedness of these companies, or?
Partly, but also it is a capex heavy sector. Remember, even if you were to somehow fix your balance sheet issues, pricing comes back, you then be lined up to spend another tens of billions on 5G and next round of
to which they are saying that it could happen this year itself.
Well, I don't think with the current balance sheets, I don't think any of them are in a position to do a 5G rollout or bidding for any extra spectrum. So that's the point, really, because as a product or a service, there's hardly any differentiation, right? It's the same voice and the same data that you get access to.
But there's a moat.
The moat in the form of licenses, to the extent
and the uplift is high.
Well, I think there is also a question of changing business models here. So earlier, tariffs were pretty much the only way you could monetize your investments, either in the network or in the spectrums. Now, I think people are thinking, can I overlay a set of services on top of that, and hence own the consumer, get access to data, use that data to deliver more services, and use that as a monetization ground. And that seems to be the long-term play. So in the interim, it is not clear whether any of these guys will actually justify increasing tariffs immediately and boosting ARPUs. So unless and until business models don't settle down, I think we're happy to stay on the sidelines.
Yeah. Would you, while you spoke about the PSUs, in PSU banks in particular, I mean, with the FM making all the kind of announcements that she has been yesterday, also she was talking about, transmission within the banking space and especially to MSMEs, bill discounting and things like that. Would you believe that PSU banks, and when we talk PSU, we only think SBI, but there is a scope for the others?
Well, again, just like the other PSUs, because of the government ownership, often the agenda tends to get muddled. Are you, running the bank to maximize shareholder value, or are you delivering public goods and services on behalf of the government? So unless that's clear, which is why we've been arguing for governance reforms in PSU banks. I think there's been several committees over the years who have recommended how should you incentivize management teams so that they start delivering value to shareholders and the board. I don't think much has been implemented. There were a couple of sort of experiments of sort through Bank of Baroda, and we have seen some positive changes as a result of that. But unless and until it becomes part of PSU managements, both in terms of hiring, training, incentivizing, more importantly, I don't think you can separate the two agenda items of the government as far as running the PSU banking sector is concerned.
It was an interesting observation that was pointed out that for Bajaj Finance, all the bankers to Bajaj Finance are only PSU banks.
Right.
They don't have any private sector banks. So Central Bank of India, State Bank of India, IDBI Bank, Syndicate Bank, Bank of India. So, interesting to see that they're bankable enough. I guess.
But markets don't like them. Markets somehow like the player who is taking the money from them.
Banking with them.
And banking with them and not really the bank.
But consumption is a story. We've been seeing HUL numbers, not bad, so to speak. Rural demand still a bit sluggish. Rains are out of the way now. We've got inflation also that's come in. CPI inflation at almost 4% now.
Yeah.
How do these dynamics play out for consumption?
And if I can just add to that, does HUL's commentary give you any indication about what could happen to some of the allied sectors?
Well, I think there's no doubt we are in the middle of a slowdown. I think it will take a few more quarters for things to recover. It also depends on some of the other action that the government might take in the coming few weeks and months. Because consumption alone cannot sustain, as we have discussed in the past. We need an investment cycle to come up. I think the corporate tax rates cut are a good starting point. You need to follow that up with a couple of other things, be it land reforms, and more importantly, fixing the financial system. That's what can take the investment cycle. And once the investment cycle starts, I think there will be trickle-down effects in terms of job creation, income generation, and consumption as well. I don't think we need to worry if that happens. But in the interim, I think it will remain sluggish. We've got reports about rural employment unemployment going up. So I don't think rural consumption has got any tailwind. Yes, monsoons have been decent. Hopefully after this, the next crop, you should see food inflation also coming off. But I don't think we can expect double-digit volume growth from the likes of an HUL anytime soon. So to that extent, I think we need to see that in context.
Isn't it such a interesting thing that while you have the Amazon sale and people buying scores of electronics, spending on white goods, and people not ready to buy a 5 rupee biscuit pack, do you buy that?
I think it's also a question of penetration, right? So these have been staples, and to the extent that staples, it's not like they've always been on a 25-30% growth run rate, nor are they declining massively. There's a moderation in growth, whereas these are very significantly under-penetrated categories, particularly the consumer electronics category, and in turn there has been a push in the form of both the e-commerce guys and the financiers. There is plenty of growth in consumer credit. Historically, India has been under-penetrated on that. So you've got a double push, which is sort of counter-cyclical. It sort of remains immune to the cycle, at least for the time being. How long it'll last, we don't know. So the push from credit and discounted retailers is keeping that demand up. But at some stage, I think you will have to justify that credit growth through income generation, ability of the Indian households to be able to service that debt. Are we there yet? I don't think so. I think there's a little bit more runway in terms of further increase in credit penetration for Indian consumers.
Well, one more step that has been taken. It's somewhere in Powai, a company called healthfin.in, which has put out this advertisement which is saying, avail any medical treatment, 0% interest, EMI options available. So now EMI is available for groceries, that we know on the Bajaj Finance side, but EMI options available for health treatments as well. And that's the interesting bit. Pramod, my final question. Would you stick to the tried and tested expensive names which probably dominate a large portion of your portfolio? Or are you looking to swap some for cheaper names wherein there might be some doubts, but the valuations are just so attractive that they give you some comfort?
No, at this stage, our portfolio is fairly stable. We're always working on new names. There are at least a dozen of them who are on the radar, but that doesn't mean that we're actively looking to change any of our existing portfolio. I think the criteria will remain the same. We will always look for clean companies when it comes to accounting and governance. We look for companies whose products and services are generally in demand, where demand is secular in nature. They're not dependent on what's happening in the external market. And thirdly, we look for companies which have a fairly strong competitive position that even at times of economic stress like this, they can continue to grow by simply taking market share of the weaker guys who fall by the wayside. I think those three will remain the core of stock selection. Valuation, while on the PE basis it might look expensive, we don't think PE is the right measure for valuing companies which can grow at healthy rates for long periods of time with very low volatility. PE at best captures next year's earnings. Companies can grow at 15-20% for 20 years with very little volatility, and simply from our perspective, most of our companies, in fact all the companies in our portfolio, are trading significantly below their intrinsic values with a reasonable degree of margin of safety, and that's what matters to us.
So stay put, I guess, is what Pramod Gubbi is saying, at least with their portfolio. You've done very well, Pramod. Keep that up, and thanks for joining in today and giving us your thoughts. Appreciate your time.
You're welcome.
Thank you.
Thank you.